Hey everyone, and welcome back. We talk a lot about retirement here, and I'm sure for a lot of you, it's right around the corner. And one of the biggest questions I hear over and over, it's all about making sure that your money lasts as long as you do.
Absolutely. It's a huge concern for many people. You spend your whole life working and saving, and the last thing you want is to run out of money during retirement.
Right. I mean, you want to enjoy those golden years, not stress about finances. So today we're doing a deep dive into one specific strategy that might help: annuities.
Okay, annuities. We hear that word tossed around a lot, but for someone who's not a financial expert, they can be a little intimidating. Lots of jargon, different types.
I agree. It can definitely get confusing. So we're going to try to break it down in simple terms, looking at one specific annuity that's been generating some buzz: the Synergy Choice Income Annuity from Aspida. Diversified Insurance Brokers have been pretty vocal about how much they like this one.
And they work with a lot of retirees, so they have a pretty good pulse on what people are looking for.
Exactly. So let's unpack this Synergy Choice annuity and see if it lives up to the hype. First things first, it promises guaranteed lifetime income. I mean, who wouldn't want that, right? But I want to know, how does that actually work?
Good question. So the key to this guarantee lies in what's called the Guaranteed Lifetime Withdrawal Benefit Rider. That's a mouthful, I know. It's often called the GLWB rider for short.
GLWB.
Yeah.
Got it. So what exactly does this GLWB rider do?
It's basically like an insurance policy against running out of money. You pay a premium, and in return, you get a guaranteed stream of income for the rest of your life, no matter what happens in the market.
Okay, hold on. Even if the market crashes, like even if my investments tank, I still get that guaranteed income.
That's the idea. You're protected from those market downturns. It's about peace of mind, knowing that your income is secure, regardless of how the stock market is performing.
See, now this is where I get skeptical. Because if I'm totally protected from losses, does that mean I can't benefit from market gains either? Like if the market booms, am I just stuck with the same flat income?
That's a great question, and that's where the fixed index part of this annuity comes in. It's a little different from a traditional fixed annuity where your return is set. With a fixed index annuity, your contract value is linked to the performance of specific market indices, like, say, the S&P 500. So you have the potential to earn interest based on how those indices perform.
Okay, so I'm not completely shut out from potential growth, but how does that actually work? If the S&P goes up 10%, do I get a 10% return?
Not necessarily. It's not a direct one-to-one relationship. There are usually what are called participation rates and caps that determine how much of the index's gain you actually participate in.
Participation rates, caps. Sounds a bit complicated.
It can be, but the basic idea is to offer some upside potential while still protecting your principal from those market dips. It's about striking a balance between growth and security.
Okay, I'm starting to see the appeal, but there's another piece of this Synergy Choice annuity that caught my eye. They talk about a 25% benefit-based bonus. What's that all about?
Ah, yes, the bonus. It's a pretty attractive feature. Basically, when you initially invest, they add 25% of your premium to your benefit base. That's the amount they use to calculate your guaranteed income.
So if I put in $100,000, they're actually starting my calculations at $125,000.
Precisely. That means your potential income stream will be higher from the start. It's a way to really boost that guaranteed income in the early years of retirement.
Okay, that makes sense. Now let's shift gears a little and talk about healthcare. This is another big concern for retirees. I saw that Synergy Choice has something called an enhanced nursing home multiplier. First of all, what even is a nursing home multiplier?
Right, good question. We all know how expensive long-term care can be. It's a major concern for a lot of people. So this feature is designed to provide additional income if you need to move into a nursing home. It basically increases the amount of income you receive from the annuity if you require that level of care.
So how much of an increase are we talking about here?
With the Synergy Choice annuity, it can be pretty significant, up to 200% for single life policies. If it's a joint life policy, up to 150%. It can make a huge difference in covering those costs.
Wow, that is significant. It's good to see they're addressing that need because long-term care costs can really derail a retirement plan. But what about accessing your money before then? Like if you need money for an emergency or something unexpected comes up, are you stuck?
You're not completely locked in. The Synergy Choice has some built-in flexibility. After the first year, you can withdraw up to 10% of your contract value each year, penalty-free.
Okay, so there's some wiggle room there. Now, what about those Required minimum distributions or RMDs, can you take those from this annuity without penalty?
Yes, absolutely. The Synergy Choice is designed to be RMD friendly. You can satisfy those RMD requirements without impacting your guaranteed lifetime income stream.
That's good to know. A lot of people get tripped up by those RMD rules. Okay, so we've talked about guaranteed income, growth potential, some flexibility, but what about protecting your loved ones? Is there a death benefit with this annuity?
Yes, there is. If something were to happen to you, your beneficiaries would receive the full contract value of the annuity, plus any gains that have accumulated over time.
That's an important consideration. You want to make sure your family's taken care of.
Exactly. It provides an added layer of security. You're not only protecting your own retirement, but also leaving a legacy for your loved ones.
Wow, so we've covered a lot of ground here. It seems like this Synergy Choice annuity ticks a lot of boxes for retirement planning.
Hmm.
Guaranteed income, potential for growth, flexibility, even legacy planning. It's pretty impressive.
It's a comprehensive approach, for sure. But it's important to remember that no single financial product is a magic bullet. Everyone's situation is different.
That's a good point.
Yeah.
So for those of you listening who are intrigued by this annuity, what's the next step? What should they do?
Well, the best advice I can give is to talk to a qualified financial professional, someone who can assess your individual needs and goals, look at your overall financial picture, and help you determine if this annuity, or any annuity for that matter, is the right fit for you.
Couldn't agree more. It's about finding what works best for your unique situation. And, as we wrap up this deep dive, I think it all boils down to a few key questions. How do you prioritize those big three in retirement? Security, growth, flexibility. What trade-offs are you willing to make?
That's really the heart of it, isn't it? Figuring out your priorities and finding the right tools to help you achieve them. And remember, retirement planning is an ongoing process. It's not something you do once and then forget about.
You got it. It's about staying informed, making adjustments along the way, and working with a trusted advisor to help you navigate the journey. Well, thanks for joining us on this deep dive into retirement income and the Synergy Choice Income Annuity. Hopefully it's given you some things to think about as you plan for those golden years.
Absolutely. Thanks for having me. It's been a great discussion.
And as always, thanks to you, our listeners, for tuning in. We'll see you next time for another deep dive into the world of finance and retirement.